Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Berkshire Hathaway stock so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 790 billion market cap. They're trading at $3.63 a share, and they have 2.2 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So you can see their free cash flow is fairly consistent. It was 27 billion in 2020, 26 billion in the trailing 12 months. Lots of free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was highest in 2021 at 91 billion. It was negative in 2022 because they have to mark to market their investments. So if a stock they own goes down a lot, they have to report that on the income statement as a loss, even though they didn't sell the stock. And vice versa, if a stock goes up a lot, they have to mark that as a gain, even if they don't sell the stock. So when there's big swings in the market, it could really affect their net income. That's why Warren Buffett says to ignore net income. Just focus on operating cash flow. That's a better measure of how the company's doing. Revenue is a sales for the company, and that was low in 2022 at 230 billion. The highest ever in the trailing 12 months, 370 billion. They reported their second quarter earnings the other day and had a record quarter, so the stock went through the roof. And I'm really happy because I own one share. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1 trillion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $845 billion. We divide that by 2.2 billion shares. And we get a calculated stock price of $387. They're trading at $363, so they're trading at a 6% discount. It's a buy according to the model. But there's so much value in the knowledge of Warren Buffett. Even when he passes, he built an amazing foundation, an amazing company. And the people he's coaching to run the company are doing it just like he's been doing it. They're making a lot of decisions, not just him anymore. Let's look at their 10Q for the second quarter of 2023. On the first page, it lists all their registered securities. The A shares, which are the really expensive ones. The B shares, which are 1/50th of the A shares. And then the debt they issued. So the symbol BRK.B is debt that matures in 2024. They pay 1.3% interest, and it matures next year. Since there's such a low credit risk, they don't pay much interest on their debt. A company like DraftKings would have to pay much higher interest because they're more likely to default on their debt than a company like this. Let's take a look at their income statement. This is the second quarter of 2023, second quarter of 2022, first half of 2023, first half of 2022. Their revenue is 92.5 billion. 65 billion of their revenue is from insurance and other. 27 billion from railroads, utilities, and energy. They do give a breakdown of their revenue. 21 billion is insurance. Sales and services, 39 billion. Leasing, 2 billion. Interest and dividends, 3.8 billion. Then you have rail transport, 5.8 billion. Utility and energy, 20 billion. Service revenue is 1.5 billion. Let's search this dollar amount so we get a different breakdown. Here's the 92 billion. 19 billion is in manufacturing. 7 billion industrial and commercial products. 5 billion in building products. 4 billion in consumer products. 13 billion of their revenue is from McLane. You could tell what McLane is. 7.5 billion from grocery, 5 billion from food and beverage. If you're not sure what McLane is, search that word in this document. This section talks about McLane. It's a wholesale distribution business that provides grocery and non-food consumer products to retailers and convenience stores, also to restaurants. They also distribute spirits, wine, and beer. They have some pretty big customers: Walmart, the biggest retailer in the world, 7-Eleven, and Yum Brands. Berkshire must own more than 50% of McLane. That's why they're reporting their revenue onto their income statement. BRK owns about 10% of Apple, so they don't report Apple's revenue on their income statement. I'll show you where they report it in a little bit. The next column is service and retailing. 2.8 billion auto sales, 4 billion of other, 1.4 billion of service. You can always search for these dollar amounts if you want more info. Then you have BNSF, 6 billion in service. Let's search the term so we know what that is. BNSF stands for Burlington Northern Santa Fe. They operate one of the largest railroad systems in North America. And this gives a complete breakdown of BNSF, their revenue, their expenses, taxes, etc. Then you have Berkshire Hathaway Energy, 6.4 billion. Pilot, 14.7 billion. It talks about Pilot right here. They acquired control of Pilot Travel Centers in January of this year. In January of this year, they acquired an additional 41% in Pilot Travel Centers for $8.2 billion. They previously had 39%. Since they have over 50%, they have to consolidate their financials onto theirs. If they own below 50%, then they have to use equity method accounting. It says that right here. We previously owned 39% in Pilot and accounted for that investment under the equity method. We now possess a controlling interest in Pilot, so they add Pilot's financials on top of theirs. Then you have 24 billion of insurance. That gives us the entire 92.5 billion. Here's a different breakdown of the 92.5 billion. 10 billion is from Geico. I think they own 100% of Geico. And here's the other companies we looked at. McLean, Pilot, BNSF. If they own less than 50% of another company, then they account for that company's profit or loss onto their income statement. Whether they sell that company's stock or not, they still have to account for it onto their income statement. So that's why you see big swings. In the second quarter of 2022, the market did really poorly. So they reported a loss of 67 billion. Even though they really didn't lose any money, they probably made money because they received dividend payments. It talks about it right here. Unrealized gains and losses from changes in market prices in equity securities are included in our reported earnings, which significantly increases the volatility of our periodic net earnings. Let's just say 10 years ago, you bought $100,000 of Apple. And at the beginning of 2022, your $100,000 is $600,000. And let's say by the end of 2022, your Apple stock is worth $500,000. So the value of your Apple stock went down $100,000. Even though you have a mark-to-market loss, you probably made money because you received dividend payments. As long as you don't sell the stock and realize the loss, you didn't really lose anything. It's the same thing as prior years when you had all these big gains. You actually didn't make any money because you didn't sell the stock. On paper, you're up, but you only make money on a stock when you sell it or receive dividends. So their income for the second quarter of 2023 is 125 billion, revenue of 92.5 billion, and mark-to-market gains of 33 billion. Then of course you have expenses. These are the expenses listed on the income statements of their controlling interests. Like for example, Geico's expenses are on here, not Apple's expenses because they don't have a controlling interest in Apple. So their total expenses are 81 billion, income of 125 billion minus 80 billion. So they have an EBT, earnings before taxes, of 45 billion, taxes of 9 billion, net earnings of 36 billion, compared to a net loss of 43 billion. But the income statement doesn't give you the whole story. Look at the statement of cash flows to see how much cash they generated. And their earnings per share this quarter are $16.52. Last year they had 1.47 million shares outstanding. Now they have 1.45 million. These are the A shares. I own one A share. I'm up about 110% on my investment. They of course have a lot more B shares, 2.17 billion B shares outstanding. Let's look at their balance sheet. They have over $100 billion of cash, 97 billion of short-term investments, which is pretty much cash, and 45 billion of cash. They always like to keep a lot of cash on hand just in case there's an acquisition. They could jump right on it. It's like buying a house. It's so much easier to buy a house if you're all cash. Because let's say a house is selling for $500,000. Would you rather sell to somebody with all cash or wait a few weeks for someone to get approved by their bank? Their total assets were 950 billion. Now they're over 1 trillion. They have $500 billion of liabilities, which means they have a little over $500 billion of equity. Equity is assets minus liabilities. They buy back lots of stock. They bought back 74 billion of their own stock. If they didn't buy back so much stock, they would have even more cash and higher equity. Let's look at their statement of cash flows. So for the first half of the year, earnings of 72 billion. The first half of last year, a loss of 37 billion. But operating cash flow smooths things out. Their operating cash flow for the first half of the year is 21 billion. Last year it's 15 billion. Because you have to adjust for those mark-to-market gains or losses. In their financing section, they talk about stock buybacks. 5.9 billion in the first half of 2023, 4.2 billion in the first half of 2022. In 2010, Berkshire came out with the B shares to make them more affordable for the everyday person. And to make them more affordable, they did a 50-for-1 stock split. But the A shares have never split. That's why the stock price is so high. Like if Apple never split, its stock price would be extremely high. Maybe higher than Berkshire Hathaway stock. If you put $10,000 into this company 10 years ago, you'd have $30,000 today. That's a 205% total return, a 12% annual return. So pretty much tracks the S&P. I think I bought my shares in 2017. The S&P was outperforming my Berkshire Hathaway stock until a few months ago. Now BRK is doing better than the S&P 500. Let's look at the company on Simply Wall Street. Its last price was $358, 780 billion market cap, up 2% in the past week, up 21% in the past year. Let's learn about the company. They operate in the insurance, freight, rail transportation, and utility businesses worldwide. It provides casualty, life, accident, and health insurance and reinsurance. They also operate railroad systems in North America. Berkshire is a holding company, so they don't do anything but buy other companies. The companies they own operate in these businesses. The company you're investing in is a holding company that doesn't operate anything. It's just a really small office with a few guys in it. They also generate, transmit, store, and distribute electricity from natural gas, coal, wind power, hydroelectric, and geothermal sources. They operate natural gas distribution and storage facilities, interstate pipelines, liquefied natural gas facilities, and compressor and meter stations. They also hold interest in coal mining assets. They manufacture boxed chocolates and other confectionery products. They're referring to See's Candy, specialty chemicals, meat cutting tools, and components for aerospace and power generation applications. Flooring products, insulation, roofing, and engineered products. Building and engineered components, paints and coatings, and bricks and masonry products, as well as home construction and related lending and financial services. They own about 10% of Bank of America. It provides recreational vehicles, apparel and footwear products, jewelry, and custom picture framing products, as well as alkaline batteries, castings, forgings, fasteners, fastener systems, aerostructures, and precision components, and cobalt, nickel, and titanium alloys. It distributes televisions and information, franchises and services, quick service restaurants, distributes electronic components, and offers logistics services, grocery and food services, professional aviation training, and shared aircraft ownership programs. They retail cars, furniture, bedding, and accessories, household appliances, electronics, and computers, jewelry, watches, crystal, china, stemware, flatware, gifts, and collectibles. And we all know they're headquartered in Omaha, Nebraska. I think in 1968, he acquired the textile company Berkshire Hathaway and converted it into a holding company. It looks like you could have bought the B shares for $21 in 1996. By the end of 2007, it was $91. Then the Great Recession brought it to below $60. Then in February 2020, it was over $220. Then COVID hit. It fell to about $160 and then ran up to $350. That was in March 2022. It came down a lot to $267, and now it's trading on its all-time high. It broke through $360 this week. Simply Wall Street's valuation is $276. They say the stock is 30% overvalued. Their trailing 12-month revenue in 2012 was $155 billion, and it pretty much goes up every single year. It's currently at its peak at $333 billion. This is the trailing 12 months. And the forecast is $350 billion by 2025. They do have a little bit of debt on their balance sheet. They had $62 billion in 2012. It's up to $125 billion. But their equity is always a lot higher than their debt. Their equity is $550 billion. So their debt to equity ratio is 23%. And this green line is their cash balance. They usually have enough cash to pay off all their debt if they wanted to. They currently have $147 billion of cash. That's cash and short-term investments, $147 billion. Warren Buffett's salary is $100,000, total compensation $400,000. He's been the CEO for 54 years from the beginning. There's no insider buying in the past year, just selling, all by the Jane Foundation. The Jane Foundation is a nonprofit in Seattle. They work to accelerate the research for muscular dystrophy. Half the company is owned by institutions, 31% by the general public, and 16% by insiders. The biggest shareholder is the man himself, Warren Buffett. He owns 15% of the company. His value is $118 billion. When you sum up the employees of all the companies they have a controlling interest of, it went from 288,000 in 2012. It's currently at 383,000. It was higher in 2019. There have been some layoffs. The ticker trades on the New York Stock Exchange, Xetra, Deutsche Börse, Wiener Börse, London Stock Exchange, Mexican Bolsa, Swiss, Lima Bolsa, EuroTLX, Wiener Börse, Bulgaria, BATS Europe, Sao Paulo Bolsa, Buenos Aires, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.